Hello, everyone. This is Peter Grandich. As always, I remind you that it's not to be taken as investment advice. You should always speak to a licensed financial advisor before making any investment decision and to read my disclosures at the bottom of the page. Well, I have said to you that if we have major news on companies that I've spoken to you about, I will come back to you. And boy, we had major news today. And with us, obviously, because they're a big part of that news, is Michael Gentile and Eric and Warwick from American Pacific. Gentlemen, thank you for joining me.
Good to see you, Peter.
So let's get right to, from a shareholder's perspective, because those two guys have a bias for American Pacific, and they did a great job. We'll let them speak. But Mike, you're the major shareholder of both, so you pretty well had to feel this was a pretty good deal for both in order to be a supporter of it. So give us your, candid and precise where your thinking is right now and why this deal is good for from both sides.
Absolutely. As you know, Peter, 20 plus years institutional investor, look at a lot of M&A deals. Companies always say they're win-win deals, but win-win deals are rare. But I can definitely say in this case, as the largest shareholder of Constantine Metals and American Pacific, that I truly believe this is a win-win transaction. So I've been on your show before many times talking about Constantine Metals as the most deeply undervalued value stock on my list, but that investors have to be patient with it. By my math today, I updated my spreadsheet, the one I have at home here, the modeling of the Palmer deposit. My view at current spot pricing using the 2019 PEA that they put out in 2019, the NPV of this asset is around $300 million Canadian. The Constantine share of the deposit, which is about 45%, is about $300 million Canadian today. Before this takeover deal, Constantine was trading at $20 million Canadian. I think Ampac's offering about $30 to $35 million Canadian today for the company. And so you say, well, why was it trading at such a low value? And why, Mike Gentile, are you so happy to accept basically 10 or 15 cents on the dollar for this asset? And the reason is Constantine was cheap for a reason. One, they had no access to capital, so they were unable to raise any money. For the last several years, they've been diluted down by their joint venture partner, Dowa, which is a fantastic partner in Japan, which Warwick and Eric will talk about. But they've been slowly kind of losing about 5-10% of the project every year as Dowa's advanced this project farther and farther along. They've been getting diluted down because they haven't had the money to move this project forward. Secondly, because they haven't been contributing any money to the project, there's been almost zero exploration spending on this project. So that $300 million of value bobs and weaves with the commodity prices, but there's been no money for exploration on this project because their partners, rightfully so, saying, if we're paying all the bills and we want to build the mine, we're not putting any money in the ground for exploration. So my argument to Constantine's board and to investors that would listen to me was this asset is extremely valuable, but it needs to be in someone's hands who has the money and the energy and the horsepower to move the asset forward and not just be a passive partner with the joint venture partner Dowa. So where we are with Ampac today is Ampac's got about $10-11 million in cash. They have a much larger market cap, more access to capital in the future. So not only can that gap between $35 million and $300 million of value close much more quickly in a better capitalized, more liquid, stronger company, but the really exciting part for me, which I think Eric will talk about a little later in the interview today, is we think this $300 million of value Constantine could be $600 to $1 billion with some more exploration, which has not been going on the last several years. So by putting this in a stronger entity, better capitalized company, you're going to grow the pie, and hopefully the market's going to give you more credit for the large pie that you already have in terms of value in the ground today. And so I'm very excited this transaction is not only going to be very attractive for Constantine shareholders, but also dramatically lift the value of American Pacific stock, which will benefit in the end Constantine shareholders as well. So as a big shareholder of both companies, I expect to see both stocks trade sharply higher over time as the market realizes how much value is present in the assets here and how much can be unlocked under this new structure and new management.
All right, so we heard from a so-called independent in the sense that he has a view on both. Let's look to the prejudice side to American Pacific. What made you want to do this? And I'm assuming that also the market conditions that happened made it even more difficult, as Michael just said, for a company like Constantine that had no money. They would have been really up, very tough to go. So it probably becomes even more attractive now than it would have been just, say, 3 or 4 months ago. Warwick, I don't want to take anything away, so why don't I just turn it over to you and Eric and share from you guys' views on why this is important for your shareholders.
Yeah, appreciate the time as always, Peter. Look, Palmer's a world-class asset. It's 14 million ton VMS. Your median size for a VMS deposit is 5 million tons. So it's almost 3 times that size already. We believe, and I'll let Eric talk to this, who spent time up there and spent time with the team, has reviewed the project in depth, has spent time with Dowa. We believe they are just scratching the surface. We believe that this can be significantly larger. But where are we today? You got a 14 million ton proven with a PEA that gives you an 11-year mine life that through the PEA says they can produce 1 billion pounds of zinc, 196 million pounds of copper, 18 million ounces of silver, 91,000 ounces of gold, and 289 million tons of barite. That's why we wanted it. This is the most advanced asset that American Pacific has. We're spending roughly $30 million Canadian in terms of an all-stock transaction to take over Constantine by getting Palmer, the other assets that they have, which are Yuma King, Big Nugget, Bose. So numerous other assets that are coming into the fold, their lower 48 properties. We're also getting cash that comes out of their treasury and by way of warrants that are going to be converted to their shareholders who now have warrants that are in the money. So it's a fulsome transaction for American Pacific. It makes us significantly bigger. But what does that $30 million buy us? Well, it gets us a project that's already had $60 million US spent on it, has a PEA in place, has a world-class partner in Doha. So Doha has been putting VMS deposits in production for over 100 years. They had Kuroko down in Japan. That started in 1888, which ended up being a 138 million ton VMS deposit. When they started, it was 24. So you can see why when they look at this and say, okay, this is 14 million tons, there's significant exploration potential. Let's put this in production because we believe in our minds that it will grow. That's great. We want to come in now with capital and with the idea of being aggressive in terms of telling the market what we're up to and showing the market what Palmer is as to how to see this grow and show the market, hey, we're going to fund this. We're going to pay for the exploration. We're going to make this bigger. That's going to create a lot of excitement for American Pacific shareholders, Constantine shareholders as well, who will become American Pacific shareholders. This is a big transaction for us. Now we've got a partnership with Doha, who owns the largest smelter in Japan. What they really want is the feed. We've got a partnership with Rio Tinto, Kennecott Rio Tinto, down at Madison. We've got now 7 assets in the lower 48. So we've got Tuscarora, Gooseberry, Red Hill, and South Lida, and then the assets that are coming over from Constantine as well. So this has become a much larger company overnight. I think it's going to attract more capital. I think it's going to attract a lot more excitement with a real world-class asset that is incredibly well advanced right at the front of it. With that, let me pass to Eric just for a moment, because Eric has spent time there and been through the project and really seen this. And Eric was a big part of the driving force here as to why this transaction got done. His comments to me of how this can get big really pushed myself and the board to desperately want to push this over the line. So Eric.
Well, thank you. I just got back from the Palmer deposit about 3 weeks ago, and I went up there to, not with rose-colored glasses. I went up there just to kind of look at it objectively and see what I saw. I was very impressed with it. Once I started going through the data with the geologists and going through the engineering, it turns out it's quite an asset. And just to point out what Warwick was saying, there are 14 VMS style mineralization outcrops on the property, and only 7 have been had any kind of drill holes in them, and 4 of those are now part of the resource. So there's a lot of low hanging fruit up there. It's just a beautiful project, and I came out very, very, very encouraged about the prospectivity and the expandability of the project, without a doubt.
So, Mike, let me ask you this. I had a little time to look at this. You and I are involved you're one of the largest shareholders of another company that I have an equally large stake like I have here, Arizona Metals. And recently we saw news on Foran Mining, which people probably figured out it was your quote that I used in my comment without actually giving you the byline on it. This project sounds like a little bit earlier days in Arizona Metals and Foran and where they are as VMS deposits. Is there any comparison there that we should look at, or am I too early on that?
No, absolutely, Peter. I mean, when I made my investment in Constantine, maybe a year and a half, almost 2 years ago, that's what caught my attention. Is what Warwick made the point earlier. VMS deposits are extremely coveted and extremely valued. And why is because they're polymetallic and they typically have very high margins. So you're getting a lot of metal per ton of what you're moving in a mine plan. And what we have now is VMS deposits, like Warwick said, 5 million tons is considered a pretty big VMS discovery. If you get over that 10, 15 million mark, you really start to attract attention. That's why DOA came in as a partner for Constantine. Getting about that 10 million tons is a magic number. Arizona Metals and Foran, Foran's got a proved PEA, kind of proved reserve type 27 million ton deposit. It's got a $600 million market cap. Ontario Teachers is contemplating putting in $200 million and they're driving towards production. They got their market dollar like a $600 million valuation. Arizona Metals, I think, is even better than Foran because it's going to be 25, 30 million tons probably very soon. And it's got even higher grades than Foran does. That's got a $500 million market cap. So here's Palmer sitting at 14 million tons, similar grades, slightly lower, but still very competitive, higher grade than Foran, probably a little lower grade than AMC at a $30 million Canadian valuation. So if Eric's right, and I trust Eric, geological instincts, and I have decent geological nose after spending 20 years looking, my view is hands down, this thing is going to grow. It's not growing because they're not drilling it. They haven't drilled it all the last 4 years for expansion. So if this thing goes from 14 million tons to 25 million tons, you have the benchmarks of Foran and AMC trading at $500 million, $600 million. I think AMC is going higher. So you can see why I'm so excited about Constantine at $30 million. The issue is no capital, no money to drill, no money to make it bigger. Market was sort of snoozing on this asset. Now in Ampac's hands, it's going to get bigger. They're going to tell the market why it's going to get bigger, and they're going to have the money to make it bigger. And that's why this transaction is that win-win deal that we're talking about earlier in the show.
Yeah, and it would have been even tougher for Constantine, given the recent, sharp sell-off we saw in the juniors and the metals, even though they're recovering also. I just think, like you said, I think it's a win-win for both. Listen, Mark, I know you still have a couple more things to say. Why don't I just give you each a little bit kind of closing remarks on what you think of all of this?
I'll go ahead and then I'm happy to pass off. I just want to say two things. One, look, I think the Constantine management team did a phenomenal job from start to where we are today on this project. They found this from grassroots and drove it forward. They brought in DOA. They did a great joint venture agreement, which was one of the appealing things when we went through that joint venture agreement. It's really strong, and they brought in a strong partner. So we're very pleased to take over that work. Yes, there was a struggle there to raise capital, which isn't a struggle that I think we're going to have. We have capital, and that's the opportunity to go out and explore this. If you think back to what Eric said a moment ago, there's 14 showings for VMS, 4 of which are in the PEA. An additional 3 have drill holes. The others don't. You're in a position here where you're on glaciers where the ice is receding. So you're starting to see these showings that you weren't able to see before. They haven't been drilled. That's our opportunity to go out, see something that hasn't been seen before, and go and drill it. This is an 85,000 acre size property. It's huge. At the far edge of it, which Eric's not including in his 14 VMS showings, there are boulders there that are 4% copper when they sample them. There's no drilling over there. This is a huge project that is screaming for more drilling and has the opportunity to be beyond world-class. We're going to go and do that. We're going to get the money to go in here and explore this aggressively, and we're incredibly excited about doing it. It makes American Pacific bigger. Now a partnership with DOA, a partnership with Rio Tinto, and now 7 projects in the lower 48. There's news coming out of Rio here shortly that they're back down, headed to Madison with their skarn expert. We'll have drill holes out of Tuscarora. We're going to be drilling up at Gooseberry. We're going to have significant corporate news coming up with other additions to our team, etc., along with some nominations coming up from an award show that we've been nominated for too. A significant amount of news, a lot to say. We're incredibly excited about this new asset for us and the other assets that have come with it, along with the additional cash that's going to be coming in through the acquisition as well. This was a smart move for both American Pacific shareholders and for Constantine shareholders. Putting these two together is going to be incredibly exciting for 2022. So.
Well, I don't know what else the other 2 gentlemen could add to that. I think that's. I don't know about you, but as a shareholder of both companies, I was already grabbing a cigarette. So
we've been talking about this and thinking about this for a while, let's say.
I didn't think this only started a week ago. I kind of figured that out.
To get it over the line, there's a lot of excitement on our end to get going on this and get out and tell the story and show people what we've got and what we think it can be. We can't wait. So I hope that excitement resonates.
Well, you've done an excellent job as a communicator. I don't think I know Michael wouldn't be involved, and I certainly wouldn't be. And I think that story there is going to become one of the biggest stories. That's not some two-bit situation. That, like you said, world class is not undercutting using the word, world class project and all. So best wishes, obviously. If everything goes right, when does it kind of get all done? Are we done before the end of the year?
Yes. Yeah, absolutely. We think this closes October, November. So there's a process when you go through these acquisitions, and particularly going through the acquisition of a public company of another public company comes with its challenges in terms of getting to this point. From here forward, the challenges have been dealt with, but you have to go through. It's a process you have to go through. So it usually takes around 90 days. We're aiming for sort of 75 days is how long it should take for us to get this said and done.
Okay, well, let's end it there. Congratulations on this great deal. It's clearly excitement. I feel something I know, as Michael said, that was very undervalued, was really stuck in the mud, and I think you guys have unstuck it. If anybody can drive it out of the mud, you two guys are it. So thank you all very much for joining us, and I wish everybody good fortune. And if you need more information, there'll be disclosures on how you can get more information from American Pacific.
Appreciate the time, Peter. Thank you.
Thank you, Peter.
Thank you, guys.
Hey, Peter.